Hi, my name is Pat O'Connor. I'm the broker owner of the Veritas Real Estate Group, and today I'm going to talk about a REIT. What is it? How can you invest in it? A REIT is a real estate investment trust, REIT. It's a corporation that either owns or manages or invests in income producing real estate type properties or mortgages. Most of these are listed on New York Stock Exchange or perhaps one of the smaller exchanges. Some are private or non-public, and I don't know about those. I do know about the listed ones. So why would you want to invest? Well, they can pay high dividends. If you want to get involved in real estate investment, but you don't necessarily want to go out and buy a warehouse and lease it, or buy a duplex or triplex and lease it, you can mitigate some of the risks involved by having a professionally managed corporation that invests in these things. A REIT has to be a corporation, and it has to pay out as dividends at least 90% of its taxable income, and a lot of them pay out 100%. So you can choose from different real estate sectors. Some REITs will specialize in residential, so apartment buildings, perhaps senior living, perhaps even individual houses, and the income is from the rents. You have different sectors, data centers, retails, Simon Properties, Simon malls are throughout the United States, so they have a REIT, and you can invest in that. Hotels and resorts is a separate category of REITs. Healthcare, so the hospitals, assisted living, those kind of things would be in the healthcare REITs. So all related to property. Self-storage is another one, and it's the rents that are collected. Then you have diversified REITs where they invest in or own multiple types. Maybe they have residential as well as hotels. Okay, and so you have your choice, and then there is the mortgage one that you can also invest in. They either rebuy the mortgage-backed securities, or they do financing for commercial or residential real estate, and the income for those comes from the interest on the mortgage. So you have your choices. How do you find them? How do you invest? I personally use Fidelity.com as my online brokerage firm. There's lots of them out there. You can look at reviews and see what you like. Fidelity happens to have a good stock screener. And the one thing about REITs, you can buy them as individual REITs where they invest in one or more properties, and you get the income from that. Or you can purchase a mutual fund that has multiple REITs within it, or something called an ETF These are relatively new on the scene. Electronic fund transfer. With a mutual fund, the shares aren't purchased till after the closing bell rings. So sometime between like 4:30 and 9 p.m. are when those shares are actually traded. The ETFs are traded as soon as possible during the days that the stock exchange, the hours that the stock exchange is open. So with an ETF, if the market's falling at that moment, you could purchase it and take advantage of the lower prices. Whereas if you were going to get a corresponding mutual fund, by the time those shares are purchased, that particular REIT may have recovered and the price will be higher. And ETFs tend to be cheaper than mutual funds. So those are your three choices: the individual REIT, the mutual fund, or the ETF. And on fidelity.com, and I don't know if you have to have an account or not, but it's free to open accounts. Fidelity.com, under investment products, you can choose stocks, ETFs, or mutual funds, and they all have stock screeners. So I did a quick check last night on the individual stocks. So you choose stocks from the drop-down list, and then you choose sector, and you would choose real estate as the sector. And 224 stocks came up. You can sort them. You can see different parameters. There's different tabs. But the overall tab would show the dividend yield. And you can include another filter if you want ones that are highly rated. You can also choose that. So there's different types of ways of looking at these. I tend to go in for value. I don't want to spend $100 per share. I tend to like to stay, $25 and lower if I can. The dividends are paid per share, not per total account value, but it's yield. And so the more expensive shares, the more expensive stocks, the yield, even if it's 3.5%, it's going to be 3.5% of a bigger pot than 3.5% of a $10 stock. But just me, I like to go cheaper and hope that it will grow. You can see the history of these. You can sort by yield. So, one of the tabs on Fidelity, if you click on, dividend yield, it'll sort from high to low. Click again, it'll sort from low to high, typical stuff. And then when you click on that, you can see the history. You can see right on the printout, it will tell you what type of REIT it is. Is it a self-storage REIT? Is it a retail REIT for your malls and stuff? So what kind of REIT is it? Some will say diversified. And so that means it has that corporation purchased multiple different sectors of properties. So that's how you could find individual stocks. Mutual funds has the same kind of screener. Again, you would choose real estate and it'll come up, and ETFs are the same as well. Now, mutual funds would most likely be less risky because it would involve more properties. You have different REITs encompassed in that. So if you want to spread your risk, that might be better. The more diversified, perhaps, the safer it is. So it's up to you. It's fun if you have a rainy day on a weekend. Go through, take a peek. You can also Google recommended REITs. I did that last night as well, and Kiplinger magazine came up with like 12 of their 2022. I like Motley Fool's recommendations. They do a lot of research, and I don't believe they're biased. Motley, Fool. So those are what I like. So I personally have Fidelity, and I do Google. And if I decide one looks attractive, I will give the stock numbers, the code, and say, is such and such a good buy? And then come up and see what these different evaluation sites have to say about it at the current time. So make sure stuff on the internet stays around forever. So, when you're doing this, make sure that they're like 2022 or late 2021 if you're I'm recording this now in April of 2022. So look for reports because, again, the market can have its up and down. So you want the latest information if you want to buy it. But it's a way to get invested in real estate without spending a lot of money, with spreading the risk out among multiple properties, even multiple property types. So have fun with it. Just start with a little bit of money and see how you like it. Pick whatever online brokerage you want. You don't have to pay to trade. You don't have to pay a trader to trade. You can buy shares by the dollar amount or the number of shares. I never want to do the math to figure out number of shares. So I'll just say, all right, I want to spend $500, and you buy as many shares as you can. Probably want to do market. So that'll be that daily price, whatever it's going for. You can limit it. And that's all it is. It's click, 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 and your sale will go through. You have to have money in your account to do it. But it's very easy to do your own trading. All right. If you like this video, you can click the like. Please subscribe. It's helpful to me. And if you enjoy these videos and you don't want to miss any, if you subscribe, you'll be notified every time there's a new one. And right now I have about 63. I upload one every Sunday. All right. I will see you next week. Bye.